today what I want to talk about is what is a short squeeze, because generally these are the things that tend to really heat up a market. Good afternoon, once again, SteadyTrade treat listeners. It's Wednesday, and guys, like we said, I think I said this, put this out on Monday. The action is back. It started, there was a little bit of momentum at the end of last week, and now even on Tuesday, yesterday, there was some really nice trades. But today what I want to talk about is what is a short squeeze, because generally these are the things that tend to really heat up a market, right? You can have a stock running without there being shorts in, but when you have shorts involved and you have a lot of shorts involved and they get stuck, those stocks tend to squeeze extremely high. And one of my favorite examples of this, and I nailed the trade. You can check it out on my Twitter at TraderBryce. I nailed BTX, the most classic short squeeze ever. Now that can be for a number of reasons. There can be big money holding it up. It very well could just be a bunch of newbies buying, thinking, well, this is dipping, and shorts like, well, there's no fundamental value of this company. And actually it doesn't matter because there's just more demand than there is supply. And you get enough shorts involved, but too many longs, and it really does squeeze. So let's look at a daily chart of this. What you'll see are essentially you had one day of a run, one day where it really should have been a first red day, and it didn't. It recovered, and it actually ended up going green at one point. And then the third day, when shorts were really stuck underwater, maybe some shorts added, it doesn't matter. Maybe shorts were adding into this push. You ended up getting a short squeeze. And really, listen, if you were a short on BTX, you got bent. You got bent. You got bent, okay? I'm sorry. The yesterday or 2 days ago on Monday should have been the clear sign, okay, this is holding up way too well for a first red day. Now, and here's the reason I'm kind of doing this little mini lesson on what a short squeeze is, because so many people think that just because a top percent gainer is running that it's a short squeeze. That is not the case. Normally what it is are newbies that are chasing the stock long, and you get enough of those and you get a really nice run. But when there's a lack of continuation, it's probably not a short squeeze, right? Because shorts probably start attacking that after it fails to make another new high, after it makes a higher low. BTX, I mean, what was that? Like a multi-day run there. And then on yesterday, when it ran from low or mid 15s up until 27, it had that nice consolidation period over the breakout level midday. It held up the entire time, meaning shorts from any previous day of the run were underwater, and if it broke out at the end of the day, the intraday shorts would also be underwater. So now you have a multi-day short squeeze and probably an intraday short squeeze if it breaks out. Again, look at this chart. Look at the consolidation midday yesterday. And then when it started ripping, I mean, there was no looking back. There really wasn't, right? It breaks out and it's just green after green after green candle. That's a short squeeze. It just, every time it would try to make a higher low, it would go higher again. That's what a short squeeze is. Now, if you're looking at a stock like RIBT from yesterday, where it had a really nice spike out of the gates and then fade, that's not a short squeeze. But a lot of people I've seen a lot of new traders being like, oh, short squeeze, it's ripping right out of the gates. That's not a short squeeze. That's a news catalyst, yada, yada, yada. I don't need to go on. You get the point. So when you're looking for a short squeeze, and to start wrapping this up here, when you're looking for a short squeeze, you want to see a period where shorts have probably attacked for days in a row. Shorts are getting tired out, and then it holds up. Instead of breaking down and bailing them out, it holds up. That's exactly what BTX did. Again, look at that daily chart, and you will see exactly what I'm looking at. And that short squeeze is after it breaks out, it just continues to keep going. If a stock isn't doing what it's supposed to be doing, like on that first red day with BTX, avoid it. Be careful with it. And yeah, that maybe you can use this to learn how to kind of see a short squeeze in advance the next time around, guys. Let me know what you think. Did you take advantage of BTX as well? It was a really awesome trade. I hope we have some more action coming forward. And I will see you guys on Friday for your Friday's edition of SteadyTrade Treats. Let's roll it out here, Cam. Yeah! See you guys on Friday.